Netflix, high flyer Netflix. How about that? Hit an all-time high up here. That all-time high was 334.5. It had a pullback. I will show, let's start with the daily, okay? Because it found support from that multi-year high on Friday. And let's take a look at a quick 60 minutes. So we'll start with the 60 minute. Here's the all-time high. Here was that pullback that we called for, was about 318.5. The stock remains in an overbought level. One of the things that we're going to show is why the $330 put was at $15.95 on the highs. They marked it down to the close on Friday with the dead cat bounce rally. We came off of that 318 right back up here to 327. The shorts were nervous going into the weekend with the government shutdown and possible resolution. Now it's out of the way. We're not hearing any talk whatsoever about how the Republican Democrats are going to solve the issues. That is just a piece of the pie. The most important thing is corporate profits and corporate earnings moving forward. Overbought is overbought, and oversold is oversold. We don't find it compelling to buy calls when they're at the highs, but rather that when stocks are overbought, there are short-term put options that can be applied and will be applied. The 330 put comes into play. Intraday, the 335 put for Johnny and Tommy. Once again, they got marked. These were up right around $19. They got marked down here. They had a great move on Thursday when we had the rhetoric with Mr. Obama coming out, blaming the Republicans for everything and not willing to negotiate. Look at every stock that is overbought needs a reason to sell. Okay, so the government's just a, a reason to sell. So let's go back to the monthly chart on Netflix. We remain at 97% K up here. I'm sorry, Netflix is not buyable up here. People who do buy it or people who have owned it and you're going to be buying up here, you're going to get going down a road that you don't want to go down, and that's called the woodshed, going into the woodshed, because that's where you're going. And the thing about it is, they're not on sale at the highs. That's not where money chooses to go to work. Only people that are complacent, people that don't have an idea of what they're doing as far as the fundamentals and the valuations go, those people don't have any sense about themselves. Please don't be one of them. Get them when they're on sale. Netflix is extremely still overbought on the monthly. The weekly level, as I'm going to show again, is not 100%. It's at about 92.23. The momentum in the stock, even though that we made that high, is starting to change. So it's going to have a trading range. Mr. Icon hasn't sold a share, he says, but he's been buying a lot of put options on it. He even admitted that, there has to be big hedges put on with these markets. Look, it's going to be a good trade. Once it gets on sale in the month of October, whenever that will be, or when it reports its quarterly earnings, growth is a little bit slower. We don't know what the worldwide build out has been in this name. We do know that anything or all the good components that it's done, meaning that they've executed well, but once again, it's not on sale. The bottom line is it's not on sale. That means that there's some bigger pullbacks to come in Netflix during the month of October. And that the bull run from $220 over here to $327 is at the top of the ceiling. As we look into year 2014 and how we end the year in 2013, is that we see some challenges because of the overbought levels, not because it's a bad company. It's overbought, and it has to come down, and it will. And there are other times that it's been overbought in different cycles, and we've called those pullbacks. They need a pullback to be viable. So once it does pull back, then we'll take a look at what the corporate earnings and what forward-looking guidance is and see where they're at in their business model to determine if the bull run continues in 2014 as we close out the calendar year of 2013 in NFLX, and what its overall earnings are and what their guidances are, and have they truly built out the platform. Remember that these NASDAQ stocks get extremely overbought. They end up in a bad way. Time and history has proved itself over and over. And what I can say is that the government volatility, the debt ceiling, all of that other stuff with the government is just a reason for the big guys who bought the stock back at around $50 a share. It gives them a good reason to take profits. Or people that were buying at 100. They've had a great move in the name. And when those bigger institutional people want to let go of this thing, you don't want to be involved holding it at the highs, because that's what happens in these NASDAQ components and these high flyers like the Netflixes, like at times like the Googles, and they're, the LinkedIns and the Tesla Motors, and lots of high flying stocks like Priceline that has a $1,200 price target on it now. I mean, come on, give me a break. One of the things that we're doing with our MMTs, our bigger MMTs, is that the short interest is very low in Netflix. It's not like it was in the old days, and that was, a year ago, when the short interest was at all-time highs. All the shorts have been taken out of the name. That's when they get good corrections. So when we come down and test a 10-week moving average at $290, we'll take a look at buying in this area. If it undercuts it and they don't do well, the 20-week moving average is at, let's just call it close to 260 right here. And that buying down in here is much better than buying at the highs when the stock is overbought. So Netflix is due for a pullback, and we have the $335 puts, we have the $330 puts to trade in the option pit.